Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 27th of October, 2020, just about 6:10 p.m. Central Time. Wow, what can I tell you? You know, it's interesting. About a third of the country's got snow cover. That's amazing to me at October 27th because I grew up as a kid in Chicago, and I remember distinctly that we were able to build igloos right around Halloween. We'd get some cold weather, it would melt, and then you get it back again for Thanksgiving and so on. So I'm not surprised by this. But here is the bad thing. You're getting a risk-off mentality in the market. COVID is rampant. It is spreading like wildfire. They announced today that in the city of Chicago now, they are closing restaurants down for dine-in eating, period. Can't do it. It's over. Now think about this. This is October 27th. The weather here is going to be, right now it's 35 at night. We're lucky to get back into the mid-50s. We are not built for outdoor dining in the city of Chicago. Traditionally, whatever they put up, I don't know how it'll work, but that's a problem. France is deciding now, do they go into a full lockdown as a country as of Thursday? Could happen. Italy, Spain, the UK, they're right behind them. There's serious decisions to be made. If you travel now in New York and you come in from another state, 95% of the states, they're banning, well, they don't ban you from coming in. They're saying you've got to self-quarantine for 40 days. I don't know anyone that does. They can say this, they say it in the city here. I have friends that travel, they come back and they're out of state. They don't quarantine, so I don't see how you do anything like that. I think they're just going to have to lock things down again. I'm very fearful about that. So we look at the markets and the combination of COVID. You have the election as of tomorrow's trade, 6 days away. Who knows where we're going to be as we come out of all this? And that is the fear. So you're seeing the stock market down again. Now, the market did try, if you were watching today, other than the Dow, most of the indices fought most of the day to stay neutral to higher. They gave up, well, we saw Caterpillar's numbers, 3M, they were terrible for the Dow. That came down on that, and that's why they were under pressure. The rest just gave up. As we saw, the dollar held, but tonight I'm looking for the dollar to jump. We're already seeing the other currencies down there. Metal markets down a bit because I think they're anticipating the higher dollar tonight. On the energy sector, if you saw the API numbers, which I've already published, they are a disaster. I think we built like 10 million barrels net. They're not looking for anything like that in the morning out of the EIA, so that'll be interesting. Bonds and notes went into that vertical dive, and they've gone into a vertical rise one more time. So here's where we're at on the weekly chart of closes. We're down so far, and this is for early Wednesday trade, down 89 points for the week. The market's still over the key number of the 18-week moving average of closes. And very frankly, it's been since May that you hit that number. So the first challenge of it wouldn't surprise me that the market looks for direction from that number. We're pulling back on this inverted head and shoulder formation. And if you start breaking through the shoulders, I call the pattern over. You really can't afford to get much under 3,300 if you're going to hold that. And from where you're at right now, that's 63 points away. That's one volatile day of trade. The pattern in the chart is ugly. It is bearish. You have a pattern of lower highs, lower lows. That's a bear pattern unless you can clear 3410, and that would reverse that, or at least end it. That's what I'd see. The problem for the market is if it were to take that out, the next resistance point is above it at the 18-day average. So what you have at this point is the trend down is measured by the swing line, lower highs, lower lows. The filter on it, which is the bias of the market, is defined by it being above or below the 18-day averages down. The Bollinger Band supports around the 33.42 level. That could be a target the market wants to go to. If that's broken, then the 100-day average is under it. You don't have to just instantly go there, but that right now is set as a target, and momentum is oversold. So The way that momentum corrects an oversold condition is either a bounce or it embeds. Embeds means both numbers that make up the slow stochastic get under 20 and go sideways. You're not even close to that in the D line, which is the blue one. So I just see an oversold market that might find support into the zones I'm telling you. And to negate the downtrend, you'd have to get back over 34.10. A surprise close over 34.36 would revive bullish thinking. In the NASDAQ, we have the same thing, but you have that outside day down. When you have that, the key to this market is not to take out if you're a bear, not to let the bulls take out 11,695.50. As long as that's not taken out, I think they're selling. Here too, though, we've entered now the fray of oversold. Any reading under 30, I define as oversold. So I have an oversold reading, headed down, support back here, and resistance, the 18-day average, with, again, a downtrend. The Dow has hit its downside target. Let's take off today's action. This was yesterday. You hit it yesterday. You didn't need today. You had the lower highs, the lower lows. What today did is it brought you back down where you're riding the Bollinger Band. You're oversold, and tonight you're breaking a bit more. Pretty stiff support starts coming in at the 100-day average. We'll see if it can be hit. You missed it back here when you had the bad news also. The more important thing is there's nothing on the chart that can turn it into a bull market on this particular formation the way that I teach charting. I'm sure other people have other opinions. In the Russell, you're back into the bearishness. So this market joined everything with the lower highs, the lower lows. Take away today's action. You had that already set up yesterday, momentum turning down. You had lost the embedded reading back here, and you already had hit that objective. So the next one, if it continues down, and that's what you don't know, if it continues down, it's wherever the Bollinger Band comes in, and tonight, boy, you're knocking on the door. You're 4 points away from it. So that's where it seems to be headed. What would negate the downtrend? Getting back over 1641.70, but it would not turn the market bullish. VIX. The market's trying to push out the sideways action that it developed. So suddenly the market's gone from a low reading of 23 back up to 33 and pushing out. Now it is overbought. It's not trending. You have a pattern of a lower low, higher high. It made another challenge, as you saw, of the 100 and the 18-day average. Probably going to get a push to the upside in the morning if stock indices stay lower. Bonds. We got down, and as we were breaking, I told you, I thought the pros were going to take money off at the Bollinger Bands. This type of pattern, lower highs, lower lows, first challenge was there. That's what I think they do, especially when you're not embedded. Embedded changes how I approach this, and in my morning subscriber video, I explain that to the traders, but this is where I think they're doing their covering. Now I'd look for resistance if you can bounce to the 18-day average, which you did today. Tonight you're getting a little more follow through, but that was what my target would have been. And that's so often I see is the case. Traders get opportunities, and if they don't take them, they go, what did I do to myself? Why didn't I take something off the table? Blah, blah. It could be an upside or downside. You think I haven't lived this for 50 some odd years as a commodity broker? I got my license in 1969. You think I haven't heard this? I've worked with thousands of people over the year. You hear it all the time. You know, all you can do as their broker is tell them what you're seeing. When I look at the 10-year note, again, you would hit right through here, oversold. I'd expect a bounce away. That's all. I don't see a trend, number one. I've got a higher high, lower low. And here you go. You're getting that bounce. Now, there's pretty stiff resistance up here, but a lot depends on the fear of people right now. I now think people are scared again. I think they're picking up newspapers. Everything's closing on them with COVID. People are telling you not to go to your family for Thanksgiving. We're hearing that everywhere in the city of Chicago. Children, do you know how we have to give candy? They want us to give candy to kids as they come for Halloween. We're supposed to get a long pipe, which I think makes all the sense in the world. We drop the candy down it, it slides to the child. Problem is, are you wearing gloves in your house? What are you doing? If I had a child, they're not going out trick-or-treating. I do have a child, but he's now no longer a little kid, obviously. Look at my hair. You get what I'm saying? I'd be very careful. Grandkids, the same thing. You just don't know, and the candy's wrapped and people touch it. It's scary. It's a different world right now. The dollar index, as you can see, if you can clear 93.13, then your next resistance point is 93.33, let's call it. But you close over that and you could end up on this formation with higher lows, higher highs, bullish bias, setting up for a charge of possibly there, and you're coming out of an oversold condition, which can give you a spin to the upside. I'm not saying that will happen. I'm saying the first resistance, I think it's going to challenge it, is 93.33 because I'm watching currencies down early tonight. Take a look at your euro. You're back under the 18-day average in a downtrend, momentum down, until you're back over 118.73. Who grabbed control? The bears at this point. I don't know if we'll close under that 18-day average, but right now they have control. And the yen's got a strong bid. What number did it go back to? You know what I'm going to teach you. You come down here. If you rally, the Bollinger Band should be resistance. Got to it, and that's what you're playing against. And in Bitcoin, still bullish. This market's not even looking at what gold is doing. It's in its own world right now, and it's just riding. This is called that gorilla glue. It's riding the upper Bollinger Band with an embedded reading. Remember I said there's a different way you handle the slow stochastic if it's embedded. Be my subscriber. We teach you all this, not, Brent versus WTI crude, okay. The battleground, if you don't see it, open your eye. Look at the 18-day moving average of closes. The market, when it's rallying on the differential between the two, that is the resistance point right now. In Brent, you're in a downtrend. Support comes in at 40.43. We're in Wednesday's trade already. What number do you think's the low tonight? 40.44. I laugh when some of this happens because it makes sense. You know, a chart is a map. You're going to make wrong turns, right? It's going to happen. This is the old day. GPS makes wrong turns if they don't mark the roads right. You know I'm right. There'll be construction. They rip up a road if they didn't do an update. Well, you're reading the chart. That should be the first support zone. Still in a downtrend in that market. WTI trying for that lower Bollinger Band, but I don't know where the trend is. I had this outside day up there, and then when we took out that low, it changed the whole chart, so I don't even try to guess it. Heating oil, downtrend, but how bearish do you want to be as cold weather is already here and you know there's going to be demand for it? And of course, you know, you're counting on air travel because that's why they call it heating oil. It's jet fuel too. And that's all mixed into this contract. So I look at it, but it is a downtrend. No reason to be bullish, but getting oversold. Target potential could be the lower Bollinger Band. And that gas, well, I think it's looking at the cold weather and it's looking at the storm that is coming. What is the new name? Epsilon? And it's got to worry what happens with that throughout the country because that storm, as it moves to the East Coast, and that's what they're saying, could it bring with it cold weather? We don't know yet. Overbought, violent back and forth action. I write about this twice a day for my subscribers. The way I write is different than most newsletters. You know, some newsletters, they're putting out 8 pages a night. Who the heck has the time to write 8 pages a night? I do a headline newsletter, and then I give you my opinion off the headline. So I'm giving you all the key reports that are going to come out tonight, tomorrow, around the world that I think are important. Then I'll spin off and tell you, hey, I think you've got to be bullish, bearish, this commodity, that one. Here are my reasons for it. And I will at time include charts in there and other ideas for you. I used to include audio commentary. I ceased it about 2 months ago. And the reason I stopped giving it is my full commentary includes my morning subscriber video and my twice daily writings. It's plenty. If you haven't tried it, I want to give you a 2-week trial for free. If you know someone you think should get it, send me their name, all the information, email. I'll make sure they get it. How do you get this? Go to our website. Under free offer, sign up for it there, and away you go. We got plenty of other offers as well. With that, I'm Ira Epstein. You have a good day. It's going to be an ugly, hard week to trade. Enjoy it.